Learn, manage, progress. Learn, manage, progress. Learn, manage, progress.
The true worth of a man is to be measured in the objects he pursues. Are you going to have business as your education now or in the near future? Or do you love to learn about business? Then this video series is an ideal destination to level up your business knowledge. I'm going to address the prime topic of management, which is finance. We are going to have an overview of the cohorts of finance as a field of study and also learn the specifics of each of them. Let's dive in. Finance is a term for matters regarding the management, creation, and study of money and investments. It involves the use of credit and debt securities and investment to finance current projects using future income flows. The easiest way to define finance is knowing the activities that finance includes. The activities are investing, borrowing, lending, budgeting, saving, and forecasting. The philosophical definition for finance could be it is a way to accomplish the labor of cultivation today so that we can benefit from the fruits of tomorrow. It's a process like reproduction that exists until there is greed. Let's see some of the interesting facts on finance. The history of finance dates back to 3000 BC. The financial transactions by Sumerians were mentioned in the Babylonian Code of Hammurabi. Finance has its roots in scientific fields such as statistics, mathematics, economics, and to surprise, even in non scientific fields such as art. The mass movement of Jews from Spain and Portugal during the 15th and 16th centuries led to the establishment of early stock and commodity exchanges. The simple exercise you follow will help you navigate yourself to the next level. It's time to feed your mind with these simple and powerful techniques. The first task is based on the fact that to increase your involvement in any field, do a research on simpler topics at the beginning and eventually go harder and harder. The second task is based on the fact that the more words you know about a certain field, you become strong at it. So get going with these simple and powerful exercises. So these are some bonus tips to have a grip on the subject and take it forward. First, let us look at the career options after MBA in finance. Corporate finance, corporate banking, credit risk management, asset management, hedge fund management, private equity, treasury, sales and trading. We will be discussing about the careers in MBA in a separate video. This is to give comprehensive view of the field for time being. Now let's delve into the topic areas of finance. Finance as taught in universities is divided into three areas: financial management, capital markets, investments. Let's understand what each field has to offer. Let us start with the first cohort of finance, which is financial management or corporate finance. It deals with the decisions relating to how much and what type of assets are needed for a particular firm. It is also concerned about raising the capital to buy the assets and also maximizing the firm's value so as to benefit the different stakeholders of a company or an organization. The next area is capital markets. It relates to the markets where interest rate along with stock and bond prices are determined. It also has its purview in financial institutions that supply capital to the businesses. The financial institutions are banks, investment banks, stockbrokers, mutual funds, insurance companies, and the like minded people called savers who have money to invest. The receiver that are businesses, individuals, and other entities that need capital for various purposes are also the part of financial institution. The next area of finance is investments. It relates to decision concerning stocks and bonds. In the investment topic, there are different analysis methodologies. They are security analysis, portfolio theory, and market analysis. Let's dive deep into it. Security analysis. It deals with finding the proper values of individual securities. Portfolio theory. It deals with the best way to structure a portfolio. Portfolio is a basket of stocks. Rational investors want to have a diversified portfolio to limit risk. So, choosing a properly balanced portfolio is important issues of any investor. Market analysis to determine the issue of whether stock and bond markets at any given time are too high, too low, or about right. Now, we have come to the end of the session. So, on an ending note, let's discuss two questions related to today's topic. The first question is: how is the emergence of latest technology changing the horizon of finance? The second one: how the finance as a field of study has evolved through the centuries and what have been the milestones in the evolution. Let's address this question. How is the emergence of latest technologies changing the horizon of finance? As you can see in the graph, there are 10 latest technologies with degree of adoption on the x-axis and level of impact in the business in y-axis. So the three technologies, artificial intelligence, API platforms, and hybrid cloud, are the transformational technology in the finance industry. However, they differ in their degree of adoption. Let's see the first technology, which is hybrid cloud. It is the only mainstream technology in the transformational level of impact. This is the usage of public and private cloud servers simultaneously. It separates the computing resources of your private and public cloud. The private cloud servers act as a storage of data and public servers for processing and computing the data. It ensures that the sensitive data is protected. It addresses the concern of data pertaining to various demographics. It cuts down the cost of procuring the hardware required. The second technology that has early adoption as the level of impact is API platforms. API platforms facilitates communication between API used in transactions. It gathers information from banks, customers, and third-party retailer to ensure transaction happen quicker and safer. It also include transaction information so that all parties involved in the transaction can track the purchase. Artificial intelligence is the topmost technology with high level of impact and also in the adolescent stage. It is used in different dimensions. Some of the usages in the finance industry include risk assessment, risk management, and fraud detection. Risk assessment: it's used to determine loan eligibility and also provide personalized suggestions. Risk management: to pinpoint trends, identify risk, conserve manpower, ensure better information for future planning. Fraud detection: it notifies when something is happening unusual and differs from usual spending behavior. Let's delve into the second question: how the finance as a field of study has evolved through the centuries and what have been the milestones in the evolution. The important milestones are 3000 BC, transaction codified in the Babylonian Code of Hammurabi; 2000 BC, prevalence of loans, regulation and ethics on providing loans; 600 BC to 100 AD, six types of loan given by Greeks; 1095 AD to 2099 AD, bills of exchange developed; 15th and 16th century, stock exchanges were established; 19th century, financial instruments such as put, call, and spread emerged.
Thank you.